Oh, welcome back. Time for the word on Wall Street. Top investors watching your money. Joining me right now is Michael Lee strategy founder Michael Lee and Bulltick Capital chief market strategist Catherine Rooney Vera. Great to see you both this Monday morning. Thank you so much for being here. Mike, kicking things off with you ahead of a big week of earnings and economic data. We got a rally underway ahead of big tech. Tech is on deck with Microsoft and Alphabet reporting third quarter earnings tomorrow. Apple and Amazon are the two that I'm watching most closely on Thursday, Mike. What are your expectations for tech?
Yeah, so it's going to be interesting to watch. You're going to get a lot of insight into what's going on in the underlying economy. What I'm looking at specifically for Apple and Microsoft is what is this dollar strength going to do to earnings? Both of these companies do a tremendous amount of business overseas, and the strength of the U.S. dollar and the speed with which it's strengthened over the last quarter, how detrimental is that to their bottom line? And additionally, with Facebook or Meta and Amazon, we're going to get, and Google, we're going to get some insight into the consumer. Our only real indicator of that was Snapchat's earnings last week, which were a bit of a train wreck, saying that a lot of spending and a lot of ad spending has been falling off, specifically with Meta. They've just been an abject disaster since Apple's iOS changed the way that apps can track you around the iPhone. They've been in a tremendous amount of difficulty there. Some smart tech people believe this metaverse is going to be a really big deal and a great opportunity for them. I personally will never be a part of the metaverse, and I don't know anyone who will. But then again, I am not on the leading edge of those sorts of things. And then Amazon pulled up Prime Day and extended their Prime Day. So do they have too much inventory on staff? So if we see any beats from any of these tech companies, it's against lower guidance. Apple, there was a rumor last week that they were slowing down production on the new iPhone 14. So if we do see beats, it's against lower numbers. But I'm looking specifically into guidance because I believe the economy is slowing down dramatically. And since the 30 to 45 days ago, when a lot of these companies finished their third quarter, they've got a lot more insight into their fourth quarters. So that's really what I'm looking at. I think earnings have to come down for next year. Right now, the estimate for the S&P 500 is 7% earnings growth. I simply think that's too high.
Yeah, I mean, Apple gives us a window into the consumer, into tech and the supply chain, into China. So Apple is going to be such an important indicator. Mike, would you buy this stock going into these numbers, or do you want to wait it out? Because remember, we were worried about production of the 14 Pro in the last quarter.
Yeah, so Apple, Amazon, Google, if they have a disastrous sell-off on earnings, I would say those are probably pretty good entry points. Buying things into earnings, to me, is such a gamble because you can call the number right and be 100% right in your assumptions, and the stock move completely against you. So trading earnings is always a bit of a crapshoot. I like to avoid it if possible. What I like to do is buy these names if the market has a really negative reaction and what I think is a negative overreaction. Those could be good entry points. And typically, the biggest names, the best names, bottom before the overall market. I do not think the overall market has hit a bottom in this bear cycle. So I think if you could get a good entry point into one of these off some really ugly sell-off, besides Facebook or Meta, I think that company's got some real issues it's got to work out, and I would kind of avoid that at all costs.
Catherine, we're looking at a macro story slowing pretty